morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation Desk, and welcome to this morning's market update on Wednesday the 30th of September. So looking at the markets today, prices are opening just a little bit softer, if not flat, to yesterday's close. Key price drivers today are, number one, we've returned to an oversupplied gas system with line pack forecasts around 14 MCM long. Number two, we've got healthy LNG forecasts in the short term and extending into Q4. And finally, FX markets and oil markets are also relatively flat, so providing little direction at the moment. Those are your main headlines. If you'd like any more details, please contact us on the email address provided. Otherwise, continue to watch for a bit more detail. So looking at the gas system again, we've got this oversupplied situation with demand being the main driver, as that's stepped down a little bit from yesterday. The key ones really, LDZ's domestic demand has dropped off, CCGT nominations are also lower, and there's less export through the interconnectors, so that means overall demand is now around 197 MCM, whereas it was around 210 yesterday. Also we're seeing storage nominations offsetting, so we've got Rough injecting a little bit, but Holford MRS site actually withdrawing a little bit, so not much of an impact on the system there. Also LNG send out is pretty flat actually, around 40 MCM, but with around 5 tankers due between today and Monday, we might expect that to increase in the coming days. This glut of LNG that we're seeing coming to the UK comes as Japanese spot prices are at all-time lows, at least over the last 5 years anyway. That means the producers over in Qatar are more likely to send their tankers over to the UK, where they can access better spot prices on the British MBP and European markets as well. Also looking ahead, the Tokyo General Gas Manager has said that they're not expecting huge appetite for LNG spot cargoes over Q4, particularly in December, as they're seeing mild weather and high inventories suppressing that demand. Elsewhere in FX markets, we're still seeing the GBP pound sterling clinging to that support level at 135 against the euro. We did see a bit of support yesterday with some data releases in the morning, but that subsided in the afternoon. There was also little direction from Mark Carney, who gave a speech, the Bank of England's governor is. He gave a speech, but it was more focused on the impacts of climate change on the global financial markets, with particularly insurance markets exposed to the likes of hurricanes and floods. Also, oil trading around that $48 per barrel level, as it has been most of the week. That comes as API data shows a likely build in US inventories of about 4.5 million barrels, but that's largely expected at this time of year. That's it for today. As always, have a great day, and we'll speak to you again tomorrow.